Tesla is up today almost 4% after they reported earnings yesterday, even though yesterday the stock dropped. Hello everyone, welcome back to the channel. Today we're going to talk about everything around Tesla, their earnings, their expectations, their deliveries, everything. If you're new to my channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out. Now let's go to my computer and see how it's doing Tesla right now. So we can see here that Tesla is actually up 3.65% today, even after being down yesterday after they reported earnings. But we obviously know that the stock is up 112% in the last year and 2,141% in the past 5 years. This run has been incredible. Now, many were wondering yesterday why the stock didn't go up that much as it used to when they reported such excellent numbers. But let me tell you that after a stock goes up this much, this quick, because it's actually 2 years, that's really fast, it's not expected for this kind of stocks to go that much up as they used to. Now let's talk about their Q3 earnings. As we can see here, they said that the operating cash flow was, the free cash flow was $1.3 billion in third quarter, which obviously is incredible because last quarter in Q2 it was $619 million as I wrote here, and now it's $1.3 billion just 1 quarter later. They had a decrease of $164 million in cash and cash equivalents, so they ended up with $16.1 billion. But that does not concern me at all because they're spending and investing a lot of money at the moment in their business to continue seeing this such incredible growth. So the best part here is that their automotive gross margin was 28.8%, excluding credits. 28.8%. This is huge for this company, and no one was expecting this to be at 28% so fast because last quarter was at 25.8%. Yes, they have a target of 30, but 28.8 is incredible. Now, they did say that this was the best ever net income, operating profit, and gross profit for the company this last quarter, which obviously is impressive. Then this level of profitability was achieved while their average sale price decreased by 6% year over year in Q3 due to continued mix shift towards lower price vehicles, which I think is incredible because one of the things that are coming out in the coming years is with a new product of the $25,000 EV that is coming out in the coming years, and obviously they have been seeing a decrease in average sale price. It is because more people are buying a Model 3 or Model Y, which are way cheaper cars than Model X and Model S. So yes, they're seeing a decrease in average sale price, but still they're seeing a nice revenue growth year over year. They did say that EV demand continued to go through a structural shift, which is what I said. Gas prices have been up a lot in the past year after the pandemic, just as inflation, but I believe that many people have decided to switch to EV because of that. Because as of what I know, in Miami, gas price right now is about $3.5, the premium one, but in California it's about $6 a gallon, and that's a lot of money just for gas. So obviously EVs are way cheaper option at the moment. Now, they did say that they had a lot of challenges in the quarter, just as the semiconductor shortages, congestions at ports, and rolling blackouts, which have been impacted their ability to keep factories running at full speed. But still, it's incredible because you're going to see that they were able to report excellent growth in the company, even with all these challenges. And I wrote here General Motors and Ford because if you check their earnings, they're going to be saying that they had all these problems with chips, a semiconductor shortage, which is completely true. A lot of companies are suffering with this, not only car makers companies, also computer makers, TV makers. A lot of technology companies are struggling at the moment because of this shortage, but Tesla has found a way to go around it and be able to continue seeing this growth in their production and deliveries. Now, talking about that, we can see that their revenue grew 58% in the last Q3, to $12.05 billion. This is only the automotive revenue. So 58% in sales, which is what I said, that EV demand is growing fast. And it's impressive because it was a huge growth as well quarter over quarter. Still, Their automotive gross margin was 30.5% with credits. We saw that without credits it was 8.8%, but still 30.5% is pretty nice because we can see that it has been increasing since Q4 2020, even though Q3 2020 was 27.7%. Now, we can see that the total revenue was $13.7 billion, which is a 57% growth. Their operating expenses did increase 32%, but it's completely fine because the revenue is growing 57%, so we expect their operating expenses to grow. Now, income from operations is something that have surprised many of us in the past quarters. We can see that last year they had an income from operations of $809 million, and it decreased in Q4 and started increasing again, but because it decreased, many was saying that Tesla was not going to be able to grow this fast. And still we see today they reported $2 billion in income from operations, a growth of 148%, which obviously is huge for this company. Something that I like is that capital expenditure is increasing. It grew 81% to $1.8 billion, all the way up from $1 billion, which obviously is a lot of money that is being spent in many things, but it's capital expenditures. They are improving their factories, in constructing new factories, and we're gonna see that later, but that's something that we like to see in these kind of companies. At the moment that we see these numbers decreasing, that's going to be a problem for the company because it means that they're not investing that much money back to their company to continue seeing this growth. Now, we already saw their delivery numbers about 2 weeks ago, but we know the Model S and Model X, it says that decreased 47%, but we know it is because in Q1 they stopped production of Model S and Model X, and still it has been growing massively in the last 2 quarters, and I don't expect this to stop because I've known a lot of people, I've seen a lot of people ordering the Model S Plaid and Model X Plaid. Then Model 3 and Model Y continue growing quarter over quarter, 79% growth year over year, which obviously is impressive. Something I liked is that they reported 237,000 in total production and 241,000 in total deliveries. So they're delivering more than what they are producing every quarter, which obviously is nice because we see that the global vehicle inventory days of supplies is 6, and we like to see this number decreasing. We don't want to see this number increasing because that means that Tesla is not selling enough cars in comparison to what they are producing. Now, their solar deployed segment of the business decreased quarter over quarter and have been decreasing since Q1, but we know it is because, as I said here, they paused the solar leasing. Still, it was a growth year over year. And then we can see that supercharger stations grew 49% year over year and still had a nice growth quarter over quarter, which is something that I think is very good for Tesla. It's kind of a competitive advantage for them that they have all this supercharger station and all this supercharged ecosystem around the United States and around the world, because all of the other EV companies need to start constructing this or start using other third-party chargers like the one that Ford uses, for example, the Mach-E, which we know is not the best thing ever, as Tesla is able to make the chargers charge better and faster their own vehicles, just like Apple do with their own chips. That's just an example here. Now, the vehicle capacity, we know that's 100,000 in California for Model S and Model X, then 500,000 for Model 3 and Model Y. On Shanghai is over 450,000 vehicles, and they're constructing Berlin and Texas, which we will see Model Y, and then later we're going to see Cybertrucks. First, they're going to start with Model Y and then Cybertruck, and then they will construct the Roadster, and the future product, which I think is going to be huge for the company because that's a $25,000 vehicle for Tesla, which in my opinion is going to be huge because Tesla started to grow even more after Model 3 and Model Y, so the $25,000 vehicle will be way more, and even better if they're able to have such good margins of 30% with this type of cars. The outlook is very important. They do plan to continue growing their manufacturing capacity, and over a multi-year horizon, they're expected to achieve 50% average annual growth in vehicle deliveries, which I think is obviously incredible because they've been having a lot of growth in the past years, and they're still expecting to continue having 50% average annual growth in vehicle deliveries in the coming years. For cash, they have sufficient liquidity to fund their product roadmap, which means that they don't need other fundraisings as they used to do. And the profit operating margin will continue to grow over time. Now in here we can see Gigafactory Berlin, Gigafactory Texas as well with the Model Y under production, Gigafactory Texas as well, Gigafactory Shanghai and more, which I think this is very impressive. I'm not showing this just to show you pictures. I think this is very impressive because I want to show you guys where Tesla is right now and where they're doing all these capital expenditures, which is what many don't understand. That I understand there are a lot of other EV companies just like Rivian that can be a huge competition for Tesla, but you gotta understand that Tesla have taken a lot of time and money, a lot of money to construct all these international gigafactories, because they are in Berlin, they are in Texas, they are in Shanghai. So this is not something that you do from one day to another, and those other EV companies need to spend a lot of time and money. I'm not saying that they're not going to be the next Tesla or they're not going to get here, but they still need a lot of time to be where Tesla is right now. So in my opinion, I'm saying that I was wrong with this company, because years ago, about 2019 or 2020, I was saying that this company was overvalued, which in my opinion it was, but see where it is right now. The growth is, I'm not talking about where the stock is right now, I'm talking about where the company is right now. They have grown a lot in the past 2 years as a company, not only as a stock, as a company. They have expanded internationally, they have new products and future products for this. Their solar and energy business is growing as well. They have the new product of $25,000 coming up, the Cybertruck coming up, which I think are going to be huge for this company. And that's why I believe I was wrong, because I did not invest in this company at the moment. I thought that it was overvalued, and even though it's up a lot in the last month, because it was at $500 on May, and it has gone up about 52% since then. I used to believe that it was very overvalued. I have to say that $900 is still kind of pricey for me. 500 was excellent, 400 was excellent, but I'm investing in this company. I have a pie chart in the M1 Finance portfolio where I invest in Tesla, Amazon, Apple, Microsoft, and Google, where I invest monthly. I don't care where the company is at the moment, even though that might not be the best decision for all of you, but since it is a pie where I have a lot of companies and big conviction companies for me, I'm investing monthly in these 5 stocks. So thank you and see you next time.